What's going on, family? Welcome back to my channel. I hope everything was good for you this weekend. Y'all was safe and ready to tackle the new week. Straight to business, not going to waste your time. I'm actually doing a Australia first, just the economy itself, just breaking that down, right? I'm trying to find a better way that I can format these videos, so y'all gotta excuse me. That it's not too long, but I also want to share what I know because you might know something that I don't know, right? So, um, or something that you've been looking for. We actually talking about it in this video. So, I try not to make it too long. I can't promise that because I'm also into the fundamentals. So right now, this is on a monthly time frame for the Australia index. This is what I'm looking at, and I've pretty much overall this market is going down overall. Breaking it down to the weekly, I feel like right now it's breaking this out of this consolidation, and price has closed. Right, I just feel like the demand for the Australian dollar is weak right now, and it's dealing with the uncertainty about just the global economics of everything. It's a lot going on right now, everywhere, and you see this big weekly bearish candle. Wouldn't be surprised if it dropped more, but I am looking for it to retrace a little bit on the lower time frames. And right now, I feel like this. I'm looking for it to retrace back, right? Either all the way up to here, because now it broke out, so I know it's going to be going down, or drop it down to the 4 hour time frame, either retrace up into this consolidation right here, this zone right here, or on the higher time frame. Now, my question is looking at the charts, because it used to be a technical trader only, but now I look at fundamentals. Technical analysis is what is going on, what has happened. Fundamentals is why is all this happening. Everything you see on this chart, why is it going up? Why is it going down? And so that's what we're about to get into now. Zoom out of that for a second. Excuse me on that. Let's break it down a little bit. Some of this stuff is still old. I'm catching up on it, like I said in the last video. Now the manufacturer sector been doing pretty good, and this is possibly because the demand is in better balance with the supply of the economy now, because the global demand is weakened, right? Australia at one point in time had a lot of supply exceeding in the economy over the demand, which can be a problem. But now, since everything is going on globally, that demand has weakened, which will bring it back in better balance of supply of the economy. So services also deal with the demand of Australia. It's doing pretty good. Right now, composite pretty good, a little bit above the 50, so it's still in expansion territory. So that's looking pretty good there. Now the business confidence was pretty high for Q1, the start of Q1 in January, right? And I want to stay on top of this because, even the central banks were saying that the surveys that they took on the business, the margins are being squeezed a bit, which suggests the demand is not strong enough for them to pass it on to consumers. So this is something to keep in mind, right? Meaning pressure also is going to be on the businesses. So we'll see how that plays out. This is coming from the central banks, right? And what this reading deals with is the analysts and business, how they feel about the projections for the future and the outlook of the economy. And it was pretty strong, but I wonder why. So I'm going to keep monitoring this, right? And possibly, again, due to both foreign and consumer demand is dampening and is now in better balance with supply, possibly the reason why they said that. Because now they're able to keep up with supplying, right? Now, Westpac leading index, this is like a forward look for the economy for 3 to 9 months out that you can see here. It increased over the previous, but not as resilient as they thought. Now, this suggests growth is declining because demand is in better balance with the supply, like we said, which could decelerate inflation. And that's what the RBA, which is the Reserve Bank of Australia, has in mind. They want to see inflation go down, right? That way they can cut the interest rates, right? Um, but also, this is dealing with the global uncertainty, forcing investors to be risk off. So they're not necessarily looking at the Australian dollar because they more of a risk on currency, meaning that if things are going good, they don't mind risking investment to get a higher return, right? When you look at Flash, this is the projections of what they think for the month that's coming out in February. And it looks pretty good, but we will see. I still look at projections. Now we're talking about the consumer sector. This is a little bit old. Consumer confidence. Well, how do the consumers feel in Australia? They live there, right? And I feel that consumers feel pessimistic about the state of the economy. Look, it's not as resilient as they thought. It did increase over the previous, right? But I just feel like when I started dissecting the economy in Australia a little bit, they're a little bit worried. They are. They said consumers could possibly feel uncertain or not too confident about the economy in future, dealing with Trump tariffs and productivity of Australia. Productivity in Australia is pretty weak. One of the articles said that the improvement was led by an increased optimism about the short-term economic outlook. But when they say the economic outlook, they talk about the next 12 months. Keep that in mind. So we'll be monitoring that. I'll be monitoring that. Coming down to the labor sector. Unemployment, they said it's pretty strong in the Australian economy. That is the only thing that's keeping Australia up. But at the same time, if consumers are looking for the Reserve Bank of Australia to cut rates, they're feeling it, right? But if the labor market is still tight, when they say tight, that means the labor market is strong in that economy. They're not going to cut rates. And you'll start to notice, get into the mind of what the Reserve Bank or these analysts are looking at. That way you can better position yourself in the trade. And so what the central bank said, it said the strength of the job market has been surprising. The labor market is tight, which it means strong, which are good news for job seekers, but for the central banks, this is what we need to pay attention to when we're trading. This could stall or prolong the disinflation process. That's going against what they have in mind for the economy. We are alert that full employment could be much higher and still have relatively sustainable low inflation. So keep that in mind. Like it's kind of dynamic there, to be honest, right? And how we would know that it could still keep low inflation rate is that if we watch the inflation reading come out, right? The unemployment did uptick, but that's fine. Employment change, meaning that if it decreases, it means more jobs were lost than created. If it increases, that means more jobs were created than lost. That has something that you want to pay attention to that. So it was resilient than what they thought. It did decrease from the previous, but look at the full-time employment. This is pretty strong, right? It was in the negative. It blew past what they had in mind. So pretty strong. The demand, participation is dealing with the demand pretty high. But they still have hiring challenges for businesses, so it could uptick. We know that. They said that, right? So we'll look for that. In the market, you want to look at the data that is coming out or pay attention to the context clues so you can get ahead of people, right? Or wait until the charts develop to make a certain level in the market, looking at market structure, right? Because just because you're seeing something and you're like, man, this is going to look good, if you're the only one that's feeling that way in the market, you're going to lose. So look at technicals to look at the footprints in the market. And so this also, there are certain things that are priced in. And so when the news come out, you think it might go up. This was already priced in a month or two ago. Be dynamic with the market, seriously. So we understand that unemployment rate is going to increase. I'm not going to be looking for a sale next time because what I'm going to be paying attention to is inflation because that's what our RBA is looking at which is the Reserve Bank of Australia. Um, they said the deceleration in employment growth could indicate a stabilizing labor market. Okay, but they said maintaining a restrictive policy stance until clear demand cooling is observed. So we keep all this in mind. Now we drop it down to the trade partner sector. I don't think there's anything new here, but I will be monitoring the tariffs to how it would impact Australia because it's dealing with China. The biggest trading partners with Australia is China, right? So we're going to see how that affects that because if China is affected, that means for China import a lot of things from Australia. If they're not importing a lot of things from Australia, that means the demand for Australian dollar is going to be low. Than sell the Australian dollar, right? Commodity prices, I'm gonna be still looking at this because prices with iron ore is declining, possibly because of tariffs with Donald Trump. So let's take a look at iron ore actually and copper because that's something big with their economy. Let's see, is this? No, that's platinum. Iron ore, good God Almighty. So yeah, that's why Australia been going down. Look how these prices is going down. There's things affecting it. It's a supply. It's always about supply and demand here. So I'm gonna keep an eye on this. Iron ore for prices has been going down. Copper. Let's look at copper. So it's upholding though. 61.8 that pattern. So you should see a little boost from there. It might drop back down, but just keep in mind there about that. I don't inflation as you see this is old. I don't pay too much about the monthly indicator. It's so volatile, right? But I still keep it in mind. Um, they say underlying inflation pressure shows signs of persistence. So you know that the RBA is going to be cautious or pausing the interest rate to cut it, which will give relief to the economy, but they're not doing that because their main focus is to get inflation down in that economy. Core price pressures are still lingering, tough. Looking at the interest rates, so they said the central bank emphasized that the monetary policy will remain restrictive, right? Even after today's reduction, when they at the time, this was February the 17th, they cut it 0.25 base points. They cut it. They said warning that if rates are eased too much too soon, disinflation progress could stall and inflation could settle above the midpoint of the target range. So they have a goal in mind of where they want inflation in the medium term, right? But if they cut too soon, which would, in the minds of consumers, since you cut, they're going to be spending. And that's dangerous, right? Because that means inflation will reaccelerate and it'll be too high, and that's going to be a problem. So they say risk on both sides remain, whether it goes down, whether it goes up. So they're trying to pretty much balance this, and they're going to stay data dependent. Look at the data that's coming in, rather than a pre-committed path. Housing, all old. Now housing credit is pretty much has to deal with buying homes, whether it's improvement, stagnant, or slowdown. And you see there was a downtick here, but I will be monitoring because the Reserve Bank of Australia is looking for demand to show signs of cooling, right? Which is dealing with the retail sales and housing credit. They trying to get inflation down. Just keep that in mind. Keep all this in mind. I don't want to go over this too much. As far as business confidence, forward-looking indicators show a mixed picture. So it's mixed. But it said expected business conditions for the next 3 months to edge lower. I don't know when this came out, but when I have notes here, it comes from the articles that I read online. The next 3 months. Now that is interesting. But sentiment for the 12-month horizon improves, suggesting firms are cautiously optimistic about the long-term prospects. If I'm not mistaken, in one of the data points that we were reading earlier, they said 12 months. But in the short term, I know that the demand for Australia is going to go down because it's going to be on a risk off environment. We don't know what's going on out here. It's a lot going on out here in the world in general. So the overall product price growth remains stable, indicating ongoing margin pressures despite easing input costs. We kind of read this in the business confidence. Wage costs remain the top concern for businesses, while demand constraints and labor shortages persist as key challenges. Let's see. The upcoming sentiment indicators will provide further clues on whether consumers and businesses are adjusting expectation for looser monetary policy. Um, Now, this is coming from the central bank. I'm not trying to get too much into it, but the forecast for Australian economy for the next 2 years is weak because consumers are still in restricted territory with consumption and has not recovered as strongly as the RBA thought it would, which is a driver of GDP growth, which is important. Interest rates still being restrictive keeps consumers constrained, right? Productivity has not been as strong as the RBA would have hoped. We grow the economy that's the way we can have trend growth higher, because if demand increases, supply doesn't. Then that's when you get inflationary pressures. So now we know supply got to keep up, because if not, that's when you have inflationary Pressures. Got to go back to that. That's okay. I'm glad I wrote that down. That's coming from the central bank when they have these monetary policy meetings. And for right now, these are old. But right now, Q1 from January to March, the themes and summaries, right, in which I want to base my trades off of, is that the Donald Trump tariffs, Russia and Ukraine and U.S. negotiations. I feel like that's what's going on here. Even, check this out real quick. Boom. Say this won't gonna be long, but it ended up being long anyway. So what the members got to say? Bullock. She pointed out that while Trump presidency might be inflationary in some ways, particularly if it leads to increased global demand. Okay, right? Okay, we need that. Or fiscal stimulus. Okay, it could also be deflationary if China, a key trading partner for Australia, is negatively affected. Now, China and Japan has something totally different than all the other countries. Everybody else is trying to get inflation down. It hurts us. But Japan and China is actually, they're trying to stimulate their economy, right? So if it's deflationary for China, meaning that the demand, Australia export a lot of things to China, right? But if China is having problems with their economy, they're not going to, their demand for Australian products are going to go down, right? So that's bad business for Australia. Now, Hauser, cautious tone on further cuts, emphasizing that the core inflation is that 3.2% remains above target. They're not trying to have that. Focus on controlling price pressures, right? Noted that the labor market performance stands out internationally, pretty strong. Participation rates and employment growth, okay, exceeding many other developed economies. Global uncertainty, effect on economic activity. So noted that businesses are becoming increasingly cautious, delaying investments, not good for Australia, projects and expansion plans, as they wait for a clearer economic signal to just to see how things pan out. And that's how I'm kind of am a little bit. I might take advantage of little small things here and there, but if it's not a good trade, I'm staying out of it. That means it's a higher risk for you to lose money. I'm not trying to go that route, right? So I might just be looking at this whole week because it's going to be volatile. There's a lot of things that's coming out. Emphasize that further rate cuts are not guaranteed. It's not even on the table and will depend on income and inflation data. That is the key thing in Australia right now. But they remain optimistic about further disinflation, but need to see clear evidence before committing to additional policy easing. How will we see clear evidence with the data that comes out? What's going on in different countries? What complements with Australia, which is China, And also looking at the U.S. What's going on in the U.S. will determine certain things. You got to be dynamic in the market. And so, going back to the Australia dollar, I mean, yeah, I'm gonna be patiently just waiting. So that's the breakdown of the Australia economy. I'm hoping I didn't miss anything. Let me see. Kind of coming back up to here. This is everything that's coming out for the week. This is important. I will be monitoring. Will there be another increase? Meaning demand is progressing in better balance with supply now with the global demand dampening. Same thing. Commodity retail sales, right? RBA is looking for clear indication of demand cooling, which is dealing with the retail sales. Um, we're still looking at the services and composite, and then also the balance of trade, exports, imports. This is going to be very important, and monitoring, especially with the trade wars going on. So I'm just going to be looking at how this is affecting the economy. All right. So that's how I break it down fundamentally. I'm looking at Australia, and I'll see y'all in the next video.